We believe that the markets obviously is a bit bearish in terms of where we're seeing in digital assets, but we do believe that mass adoption is about to.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video, we are going to confirm that the next bull market cycle is going to be one that you are not going to want to miss. So make sure that you stick around for the entirety of this video breakdown that is going to confirm some things that are being implemented into the market now that is going to allow these financial institutions to onboard themselves in a way that we have never seen before in previous bull market cycles. If you enjoy these deep video breakdowns, go ahead and do us a favor, smash that thumbs up button and subscribe to the platform. So I have a series of video clips for you all, and I'm going to be speaking in between them, showing you guys that the devil is in the details. All this information is going vastly unnoticed, and what is being projected to the masses is one thing, one agenda to steer individuals, retail market participants away from this digital asset space. I have a firm belief that these large financial institutions know exactly what is about to happen.
And top banks are definitely very well aware about what is happening, what are the new options. But indeed, given the complexity of the organization, they need a bit more time.
And they don't want retail investors involved because they know how massive of an opportunity is on the table. So sit back, relax. The first video series of clips that I'm going to show you all is how the media is showing you all one thing, and then what's actually happening behind the scenes is another.
Yeah, I mean, they are all looking at it. And somebody mentioned earlier, JP Morgan is really, despite what the CEO of JP Morgan says, JP Morgan is making a lot of strides.
Yeah, what I was also pointing out is that the actual use cases are sex trafficking, tax avoidance, anti-money laundering, terrorism financing. It's not people just buying and selling Bitcoin. There's no value to, if you're buying and selling Bitcoin.
Yeah, I mean, they are all looking at it. And somebody mentioned earlier, JP Morgan is really, despite what the CEO of JP Morgan says, JP Morgan is making a lot of strides.
We at JP Morgan obviously are a meaningful player in this space, and we think that the whole crypto DLT technology is very exciting, and that is something that one should take very seriously. So
it's there's a lot of money behind it, so it can't be a total stupid thing. So you better make sure that you get engaged in it, and we as an association obviously have to prepare for the future.
Right. So now that you all understand, I'm not making this stuff up. One thing is being portrayed to the masses, and then what's actually happening behind the scenes is these reputable individuals telling you all that Jamie Dimon, realistically speaking, is a liar. And then you have reputable individuals from JP Morgan telling you all that you should be paying attention to crypto. Why do you think that is? Again, scratch your head on that. So I'm trying to show you all how massive this next bull market cycle is about to be. And these financial institutions know that. So now you're going to hear some individuals talk about why institutions aren't getting involved. It is because of lack of awareness of opportunities and the fact that they don't know too much about this nascent asset class, which is exactly why you see them behind the scenes hiring developers, hiring individual representatives from native cryptocurrency companies to come work inside their organizations that we have confirmed from previous panel discussions is for a fact happening.
All of the large financial services institutions and a lot of the smaller financial services institutions have really kind of matured in the way they think about it and the way they staff their innovation labs to have specialists. And this is not just in the financial services institution itself, also in the regulators and also in other bodies as well. So, for example, for the BIS, we work with the BIS for quite a long time. A lot of people that are now on the BIS are actually people that came from Circle or came from other, crypto-backed industries.
These individuals, these reputable individuals, know exactly what is on the table via mass adoption that is about to take place, but they didn't know too much about cryptocurrency previous bull market cycles. Let them confirm that for you.
Tell us a little bit about what you feel the main institutional obstacles that sort of slow adoption down being.
The feedback we've had the most has been we just don't know enough about crypto. And I think the feedback we've had the most has been, we just don't know enough about crypto. And I think
your distribution point is a good one, though. There's a lack of awareness of these opportunities now, I would say, so the demand is quite nascent.
Now, on the screen, I have for you Martin Howard. And I'm going to just read a little bit about his background before I play a video clip from him where he goes on to confirm that institutions will migrate over into crypto. Martin is a senior vice president in index research at Wilshire Indexes with more than 15 years of experience working in quantitative finance. Martin is responsible for designing Wilshire Indexes and digital asset offerings, which includes pricing, settlement fixes, indices, and their combination with other asset classes. So if you're not going to listen to me tell you that institutions are going to adopt cryptocurrency, listen to somebody with many more credentials than myself tell you exactly what I'm attempting to tell you all, that institutions will eventually migrate over into crypto.
To that point, that things may not be in the financial world, and the basis that 2 of the 4 panelists are from technology companies and not from financial companies. So I think tokenization is very much, you will see a shift away from the financial world in the TradFi kind of inverted commas, if you like, to be much more technology orientated.
So I mean, to go back to the original question of the panel, you think that, where does that answer sit in relation to the question of the panel, I suppose, when we're moving away from traditional finance?
Yeah, traditional finance will move towards crypto, and not the other way around.
Okay.
Well, the value is that it's actually easier and faster and better to build financial products on a DeFi stack than it is to build it on the old traditional financial stack that was built over the last 50 years. And that's why you're seeing major banks, major PBs start to build things like tokenized money market funds. Because they see this and they say, oh, the crypto rails are actually better for trading these traditional assets than the current rails that we have. So we're going to move over slowly.
Correct me if I'm wrong, you guys and your peers are coming in a big way. It's just happening at the pace that it's coming, and to make regulators comfortable with it.
I think that's right, and I think it's accelerating, for sure.
Now that you've heard Martin Howard confirm that institutions will migrate over to crypto, I want you to take a second and remember what those 2 ladies said about why institutions aren't getting involved. It's because of their lack of awareness of opportunities and because they don't know too much about cryptocurrency. Well, let me show you what Martin Howard is heavily involved in, Wilshire Indexes. Now, if you're not too familiar with what this company is, this was posted on August 22nd, 2023. Wilshire Indexes is a leading global benchmark platform in digital asset research, a specialized provider of clean digital asset data research insights. It says right here, this enables traditional and digital native financial institutions to perform sector-based performance attribution, assess sector themes, and construct custom portfolios. Why? Because they are about to onboard into this space. So this company gives them data analytics so that way they can do research on what cryptocurrency projects to be investing in, right? You guys can go check this out yourself. Here is their about. It says right here, this has made it difficult for institutional investors to gain access to a broad view of the industry because there's so many digital assets. It's such a vast, new, nascent market space. And when you come into this space, even as a retail investor, take into consideration that you have to do your research on projects, you have to do your research on utility, what use cases these digital assets provide. Well, this company, this organization lays all of that out for these financial institutions. Here you can see it's a sector that clarifies an asset use case, right? Themes that help identify whether an asset is a part of a broader movement or feature set. So it gives these financial institutions all this data about these digital assets so that they can pick and choose what digital assets they want to invest in. And here, this is from CoinDesk. You can scroll down and you can actually physically see what assets they have listed. We have XRP, Matic, Link, ICP. I mean, it's a whole vast list of digital assets that they have for these financial institutions to go in and research in a well-structured way that is easily laid out for these financial institutions to actually onboard themselves into the space without feeling clustered, without feeling lost in the sauce. The individual representative, Martin Howard, who is the senior vice president of this organization, just told you all that institutions will eventually move over to crypto. And then you heard the representative say why they did not in previous bull market cycles onboard into the space due to lack of awareness of opportunities and due to lack of understanding about this space. So you see how that is one massive thing that is transforming in this market, that is giving these financial institutions more confidence to actually jump into this space. A physical platform that gives them the data analytics that they need to sift through the large, vast amount of cryptocurrency projects so they can pick and choose what cryptocurrencies that have quality that institutional clients require. You see that right there. Okay, so that was one massive aspect. So another thing that was stalling institutional adoption was them having a hard time finding actual use cases and them being able to implement this technology into their back-end system. That is all set to change. Then you're also going to listen to an individual mention Broadridge, and then you're going to hear the CEO of Broadridge tell you all physically in the flesh that crypto is not going away, and that it's funny that the vast majority of the retail masses think that that's what's happening.
You know, we can see, and actually there is value already that we're generating from that transaction, but you need the market more broadly to adopt that. And collateral management is slightly different from tokenizing assets. There, the real kind of driver of adoption will be liquidity. But for collateral management, it really is kind of onboarding and actually getting more and more people to actually see and understand the benefits, and actually getting more and more people to actually see and understand the benefits.
Well, the value is that it's actually easier and faster and better to build financial products on a DeFi stack than it is to build it on the old traditional financial stack that was built over the last 50 years. And that's why you're seeing major banks, major PBs start to build things like tokenized money market funds. Because they see this and they say, oh, the crypto rails are actually better for trading these traditional assets than the current rails that we have. So we're going to move over slowly.
And I do think that over the last 12 to 18 months, the sheer breadth of the buy side that has started to get involved in the market is now forcing more on the sell side as well. So it is starting to happen, but it takes time. You need to understand the rule books of some of these platforms. The onboarding process probably isn't as slick as it could be because a lot of these companies are quite new, but that's all improving, it's evolving. So I remain pretty optimistic that, you know, over the next probably 12 to 24 months, we'll see a significant change. And even just in the US, look at Broadridge.
Where you and Broadridge, are you seeing the move to DLT-based platforms occur?
Yeah, I think it is. You know, it's funny because with sort of the implosion of the crypto market last year, I think the general public is sort of thinking like, oh, well, this stuff is going away. Mm-hmm. And, you know, when you talk to people in the know in financial services, it's like, no, it's not going away. Yeah, it's very real.
I mean, they already have, you know, billions of activity. Again, it's not perfect in terms of the model that they have, but it just shows that people really do start to see the benefit of the underlying technology.
The very last two reasons as to why this next bull market cycle is going to be 10 times bigger, in my personal opinion, than the last previous bull market cycles is because now for the first time, we are seeing regulatory clarity on a global scale pickup. That means that the regulatory framework is much more solidified than it was in previous bull market cycles. And the infrastructure that these financial institutions have been building for the past couple of years to actually handle large amounts of institutional liquidity and volume is for a fact in the making. Now, I can't sit here and tell you how close it is to completion, but it is for a fact being built behind the scenes, and that was not developed in previous bull market cycles. Listen to a reputable individual in October of 2023 tell you all that regulatory clarity needs to happen and that infrastructure needs to be built. And then you're going to hear Jeremy Allaire from Circle from a panel discussion in December, 2 months after October, confirm that regulation is happening and infrastructure is being built.
I also see that the regulatory framework needs to be built up.
All of a sudden, the software that makes the experience of the internet far, far better is coming online. That's where we are with this. And so essentially, you need legal certainty. So you need legal certainty on how these are treated and how they're used. That's happening.
But what do I see? Yes, I see that infrastructure is still not established.
You need scalability. So you need infrastructure that can readily support, both from a user experience perspective and a raw throughput perspective, the kinds of things where you can do internet scale things. That's happening right now. And then you need a free market environment where you've got entrepreneurs and developers and other things building. And I think that has happened, and I think we're going to see another pretty significant wave of invested capital into people building on this now that we've kind of I think we're clearing away some of the debris, as it were. So I think my view is that 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 kind of mainstream catalyst and the experiences around those are really right in front of us, and we'll see over the next 3 to 5 years that sort of scaling out to where literally 1 billion, 2 billion plus people are interacting with this on a regular basis.
We believe that the markets obviously is a bit bearish in terms of where we're seeing in digital assets, but we do believe that mass adoption is about to come.
So again, understand the overall zoomed out perspective that financial institutions will eventually onboard themselves into this digital asset space. And in my personal opinion, the next bull market cycle that we are set to experience for the first time ever with institutional involvement will be absolutely life-changing. So make sure that you all are doing your research on digital assets that provide real-world value and actual utility. I cannot stress enough that that is one of the most predominant and important factors to your longevity in this market. If you're here for some quick fix overnight game and you're investing in meme coins and you get rug pulled, don't be upset. Understand that the interest in this market will eventually shift from speculation on meme coins and interest in all these meme coins pump and dumps to real-world value and utility. Many blessings to you guys. If you enjoyed this video breakdown, do us a favor, smash that thumbs up button and subscribe. It does take time to make these video breakdowns, and we do appreciate the love and the support. If you found it informational, keeping you on the loop with what's actually happening behind the scenes and not the mainstream media agenda, do us a favor, share it on your social media platforms to spread the message to more individuals like yourselves. And as always, be cognizant, be aware out there. I'm not telling you guys to go out there and invest in digital assets. What I am asking that you all do is you take it upon yourselves to do more research. And see you guys in the next video breakdown.